Yeah, hello guys. In today's class, I'll be explaining what fair value gap is. I've explained what liquidity is before in the previous class, and I told you liquidity hunts for your stop loss, the market hunts for your stop loss. So, but in today's class, we'll be talking about fair value gap. So, talking about what fair value gap is and how to use fair value gap as your mode of entry level. So, today was a bad day for me anyway. I was really having a bad day today. I was not in the right set of mind today, so I was really pissed off with someone who duped me. I'm really pissed off. Anyway, it is someone I helped to trade an account, and the agreement was 50-50 split on the profit share. And yeah, today was the day I completed today was the day I supposed to collect my money. Today was the day for withdrawal because it's 1 month. It was a $50,000 account. So I wasn't pissed off because of the money, but I pissed off because I felt I was scammed. So I grew the $50,000 to $90,000. So I was expected to get for $20,000 from it, and he also getting his $20,000. But I got scammed. I got scammed. It's really painful though. It's really painful because I've never felt scammed before. Like when it comes to this online stuff, I've never felt scammed before. So the person was the person who messaged me directly, and I met him on WhatsApp. I say first WhatsApp, Facebook. I met him on Facebook, his account, and it was like he liked my portfolio the way I used to post on Facebook. It's been a long time now since I post on Facebook, so he likes the way I post on Facebook, and he wants me to trade an account. I said okay. He first gave me a demo for a test. I passed the demo in less than 1 week, and I was like okay. He gave me the $50,000 account signed. I grew the money to 90, and after the withdrawing process, she took my money and everything. I was like, when I was waiting for him to pay me, I was chatting him on WhatsApp. His number was not going. I was chatting, it's not going. Then I got angry, like, what is wrong with this nigga? He's like, when someone block you on WhatsApp, you know now. The picture was not showing, nothing was showing. Before his picture was showing, everything was showing, and nothing was showing any longer. So I just like, damn. So I went to the Meta 5 account to check the account. I tried to activate the account back. It was showing authentication failed. Then I know he has changed the trade password. Then no, he got lucky though, sha. But that's not to the business. If I get my $20,000, he owns his own $20,000. I can continue trading that $50,000 account, and it's something that you forever get benefit of. But it's just out of greediness, and just out of greediness. So let's move to today's class. So it really affects my trading decision today. I was making some silly decisions, some silly move in the market. I was pissed off. I was not really thinking straight. So after that, I left the market, and since around till 5 o'clock. Till 5 o'clock, when I opened the chart 5 o'clock, I saw an entry. I said, okay, let me just speed this entry. I didn't even analyze it well, and the entry hit my break even twice. That's all for today. I just left it. See, on Monday I'll trade again because my mind is not really settled now. That money I had plans for it because I was using the money. I want to use the money to get something else. So I didn't want to touch the one I have, but the guy fucked me up. I really felt that scam. I felt it. So let's move to today's lecture. So I'll be talking about fair value gap, just like I said. I explained what liquidity is before in the previous class. So you should have idea if you're seeing a market moving to a direction, you should check what is the market hunting for. Is the market hunting for liquidity? If the market is hunting for liquidity, then just find a way to ride on with the market. Let the market drive you to where liquidity is and take your profit. So what is fair value gap? Fair value gap is also indicated as an imbalance. Fair value gap is a displacement level, is a displacement candlestick either to the upside or to the downside. With how will I put this simple? I want to make the definition very simple, very very simple. I didn't jot this down. So I'm just taking it out from my head. I want to make the definition very simple. Okay, our fair value gap is consists of three candlesticks. The first candlestick and the second candlestick and the third candlestick. The second candlestick has to be a displacement level. It has to move a very good displacement level. Uh, Sorry guys, I told you I was not in the right state of mind. I don't know how to put this definition for you guys. I don't know how to. But let's just put fair value gap is an efficiency that needs to be filled. So market created an efficiency and it has to come back to fill that inefficiency. Sorry for using efficiency. It's inefficiency. Fair value gap is an inefficiency that needs to be filled. So the market created an inefficiency and the market has to go back to what fill that inefficiency, fill that gap it created. Now I'll show you examples of fair value gap and so you understand what I'm saying by fair value gap. Now a fair value gap consists of three candlesticks: the high, the middle, and the low. Sorry, the low, the middle, and the high. That is a fair value gap. So let me show you. Let me just quickly pick a random fair value gap here. Now this is a fair value gap. Come in. This is a fair value gap. Now this is the first down close. This is the first candlestick. This is the second, and this is the third. The first low. Look at the first low here, and the second candlestick. Then the third high. This point to this point is a what? Is an efficiency that the market has to what? Come back to fill. So at this point in time, we retrace this fair value gap. We'll draw our line here at this fair value gap. Now once we see this kind of fair value gap, we count it as okay, the market has created a fair value gap. There's high chances that the market will have to fill this fair value gap before it continues its movement, either to which direction it's going to. Okay, for example now, look at a very good displacement candlestick here now. This is a very good displacement candlestick. Now after that displacement candlestick, what do we have? We have the first candlestick, which is the what? The low, and the third candlestick, which is this high. This is the low here, this is the high here. So the line, the gap between them, this gap between this here was not filled. I wish it was filled, like maybe it created a wick. Maybe for example now, it created a wick to the upside. If it created a wick like this, that means this fair value gap is no longer a fair value gap, because this wick has already what? Filled the gap. You can see this one and this one are not equal. This one low and this one high are not what? Equal. But if there's nothing like that, let me remove it. I want to delete Oga. What is this one now? Okay, since you don't want to delete, I'll move you then. Ah, pardon me, oh, I'm not asking for this one, oh. I'm not asking for this one, oh. I don't know what this system is doing. Just give me the displacement to delete this thing now. Ah, okay. That is what I'm looking for since. So if you look at this now, we have this up close candle and we have this down close candle and we have a displacement at their middle side. So this displacement here is what? The fair value gap. Since we saw this kind of displacement, we are expecting okay, well, this market is about to what? To go down. Where is it going to? That is when you start targeting liquidity. Okay, the market may come down to clear this liquidity. It may come down to clear this liquidity. But don't forget that you also have what? Other fair value gap at this zone here. There is a fair value gap from here. Let's say okay, this you can see the first candlestick and you can see the second candlestick. What do you see here? A displacement level here. So you highlight this one. This is a fair value gap. Come on now, what's wrong? I like this one. This is a fair value gap here. Now, what else do we have again? We have another fair value gap. This one that you highlighted here and this one that is up here is, and this middle here is also a what? A fair value gap. So if you are seeing a fair value gap like this, these are too much now. So which one are you going to pick? You have to leave it. Since you're a beginner, I don't want to bombard your head with so much strategy. If I see this kind of thing, I have a way I used to deal with it. I have a way I'll deal with it, that I'll pick the right fair value gap. But let me show you some. Let me just show you if I want to deal with this kind of situation now. If I want to do this kind of situation, I use my fib. Now I'll draw my. Come on now, what's this? Come on, this is not what I'm asking now. This system, act normal. You self won't do your own. Now I'll drop it to the what? To the first level created. Now I'll be entry at an equilibrium. No, sorry, at a discount level here. I'll be entering at this discount level here. So I won't look at this one. I won't look at this one because I feel this is a very high discount level, and there are chances that the market may not take an entry for me at this level. So there's still a lot you learn, Sha. There's still a lot I still have to explain on this fair value gap before you can have it as a perfect way of making profit in the market. Because you can't just see a fair value gap and you say you want to take an entry on that fair value gap. There are so much fair value gap on the charts. So how do you know the right fair value gap? I don't know. This system want to start shooting. So now I don't know if you understand what I'm trying to say here. I don't know if you understand this class, but if you, anytime you see a three candlestick and there is a displacement level within that candlestick, you have the first high, you have the second low, and you have a displacement candlestick in the middle of the high and the low. That is what? That is your fair value gap. That is your imbalance. Now, just like this one I explained, this is the first candlestick. This is the first candlestick low. This is the low here. This is the high of this candlestick, but we are not counting this high because there's no second candlestick at this upper level. But we are it's what? It's on the down level, so we won't be counting this one as high. We'll be counting this place as what? As low. Come on now. So I marked that place. Let me change the color. Let me change the color. Style. Come on now. Move this system. I'm making my class slow now. Let me change it to green. Okay, that green is not good. That green is not good. Let me bold this first. And let me change it to red. Let me change it to, okay, blue is okay. Now that is the low of this candle. So this is the first low, and you look for the, maybe there's a second low there. We have what? This is the first low, and this is this one high. Why am I not using this one here? Why am I not using this bottom here? And why am I not using this eye here? I don't need this eye level. I don't need the eye of this candlestick. Because why? I wish there's a displacement level after this eye. There's a displacement level at the top. And we still have another candlestick that went down a bit to what? To merge with the displacement level that it created at the top. Then I'll call that what? If you ever look up. I'll now respect this as, I'll respect this as what? As a eye. And I'll respect the third candlestick as what? As low. But for now, what do we have here? This is the low. This is the eye of this candlestick. Let me zoom it for you guys. Oh man, it is zoom. I want to zoom now. Come on. No. Look at what I'm saying here. See the candlestick low. See this one candlestick high. Ah, oh no. See this first candlestick low. See the third candlestick high. What do we have in the middle of this first and the second candlestick? And first and third candlestick, a displacement level. a displacement level. Why am I not highlighting all these ones? Why am I not highlighting all this candlestick? I'm not highlighting this candlestick. Why? Because this first one has already filled the gap at this level. Let me touch this blue line so you to see. Now you can see it filled that line. That blue line covers that level. So this first gray candlestick has filled this displacement level at this half point here. But did it fill it completely? No. After this one created here, it opened at this bottom here and it went up. Well, open maybe is going to complete this level, but did it complete it? No, it stopped at this place. And what happened? It give us what? It left a gap at this zone. It's supposed to fill this displacement. This is an efficiency the market created. So this efficiency has to be filled. So if this candlestick did not fill it, you wait for the second candlestick or the third candlestick or the fourth candlestick. One candlestick must what? Must fill it. Now if you look at it, this is the first candlestick. Did it fill it? No. Did the second one fill it? No. Did the third one fill it? Oh, you can see? Can see the third candlestick what? Oh man, this is not what I'm asking this system to do. Oh, sorry guys, this system is already malfunctioning on its own. I don't know. Now look at it. Now did this one fill it? It fill it, but I'm not expecting the market to fill it completely, because if the market fill it completely, there's chances that it will keep on going up. So I'm expecting the upper level, the upper half level, to be left open, which is this is the upper half level. This is the upper half level. This upper half level has to be what? Left open. If this half level is not left open, I'm not going to take that trade. I'll wait patiently till another opportunity comes. Now when I see that this upper half level is left open, what will I do? I can pick a trade at the second candlestick, or I pick a trade and that same candlestick, and what? Take my profits. Now this is where you take an entry from on the fair value gap. Anytime you see a fair value gap, respect the what? The market is going to come back to retest it. And if the market is coming back to retest it, always look at that fair value gap. Is the upper side left open, or is the downside left open? If it's the maybe it's the downside to the upside fair value gap, or the upside to the downside fair value gap. I will explain what that is. I will explain it. If you don't understand, please just go to the comments to the group. Say you don't understand. I'll remake the video. Maybe na the mode where I did. I make una no go understand. I'm not in a very good mood at all. So now let's check for another one. Let's check for another one. Let me use another one to explain to you guys. It seems I'm going to do what I don't want to do. I'm going to do what I don't want to do. And it's so cold. Okay. This weekend I don't need them. I don't need them. Okay. Okay. Now look at this one. I want to show you another example of a sell side fair value gap. We are talking about sell side fair value gap for now. Later we'll talk about buy side fair value gap. Now if you look at this sell side fair value gap, look at this candlestick. Another scenario. We have the what? The first one, the second one, and the third one. What do you see that is left open at this place? An efficiency that hasn't been filled. Now if you look at the first candlestick, this is the low and this is the what? The high. Let me zoom it again for you guys. Hey, my system want to control himself. What is this one now? Now, this is the what? This is the first candlestick. We are talking about sell side fair value gap, please. Not buy side fair value gap. I'll explain buy side fair value gap later. Now, what do you see? This is the first closed candlestick. This is the third close candlestick, and this is the second one. 1, 2, 3. It always consists of 3 candlesticks. Now this one went to this level. The market opened at this level, went up a bit, and what left a wick to show you that the market actually went there before it was came down. It came down to this level, and this one opened at this level, thinking it's going to what fill and merge with this wick. Did it merge with the wick? No. Look at it. This is the wick here. Did it merge with it? No. But what are we expecting? We are expecting the market to merge with it. Did it merge with it? No. Since the market did not merge with it, that is what? That is an opportunity. That is a what? That is a fair value gap. This is a fair value gap. The market did not what? Did not merge with it. It's what? It's a fair value gap. So what do? You place your what? Your sell limit here. Your sell limit order here. Come on now. Now, look at this one. If you can look at it now, the market did not even respect the what? the the mid the half side, the upper side I want to be left open. The market did not respect that place. What happened? It rallies up to the what? To almost to this. I'm going to explain. Okay, okay, don't worry. Now the market rallies up, broke the fair value gap to the upside, created this jaguars this thing. Now this one is to let you know that okay, this market is what is finding it difficult to what to go up because of this week we are seeing at the upper side here. This is a rejection put to the downside. The market went up, created a rejection put to the downside, open at this level again, went up, created rejection put to the downside again. Same thing when you are seeing this continuously, what will come to your mind? Okay, this market is about to fall. This market is about to fall because it is under what? An imbalance. When you see something like this, the market is about to fall. What do? You place your entry. You place your entry and you hunt for the next liquidity, or you allow the market to drive you. I don't know what's wrong with this my system. It's doing things on its own. Now, when the market you aim for this liquidity, you aim for this liquidity, you aim for this one. If you are strong enough to hold the position, then you can hold the position to this what? To this fair value gap at this level here. How is it a fair value gap? Look at the first candle, 1. Look at the second candle, 2. And look at the third candle, 3. 1, 2, and 3. Did this first one and this second one close each other? No. Is there a gap at the middle? Yes. So this is a what? This is also a fair value gap. You can aim for this fair value gap if the market may retrace the fair value gap to go up, or you hold your position to this level. You can hold your position to this level. Now, if you see that kind of thing, that's why you always have to be what? Setting your break even. You always have to be setting your break even. Imagine you enter from here now. Your stop loss will be here, right? Your own stop loss is also at a liquidity level, so you don't have to be, you don't have to complain. Your stop loss will be here, right? Now, if your stop loss is here, you take an entry here, right? Then you start waiting for it to go down. After you go down, clear this liquidity at this level. Where will you reduce your stop loss to this level? Reduce your stop loss to this level. After the market clear this liquidity, reduce your stop loss to this liquidity. Do you see that? Now, after the market clear this liquidity, reduce your stop loss to this liquidity. Now, if you reduce your stop loss to this level, what will happen? You may get stopped out before the market may ever come down to this level. That is how it is in forex. It's better you go home with something, or you go home with losses. Now imagine you did not take profit, you just set your profit at this level, you set your TP at this level. Did the market hit your profit? No. What happened is it retested this imbalance and start going up. Back to your entry again. Back to your entry. Now you can be lucky since your stop loss is at this level. the market did not hit your stop loss. But if you are using a broker that have a very high spread, that is the end for you. Spread may take you out. Spread may take you out here, not the market. Now the market did not hit your stop loss. What happened next? The market start going down. Start going down. Do you see I predict 1000 pip? This I predict 1000 pip, guys. This I predict 1000 pip. And this I catch it. Now after the market hit my TP and the market went to this my entry level again, what can make me take an entry again is this candlestick. Let me show you. Now I'm having this rejection pull to the downside again. I'm having this rejection pull, and once I see this rejection pull and I see this kind of displacement, then I know that this market is about to go down again. I can take another entry at this level again, set my stop loss to the same level, then wait for the market to do its what? Do its job, and follow it and drive through. Now that is the what? That is the sell side imbalance. Now, is there another imbalance you can check? Okay, what if I'm unable to enter from here? What if I'm unable to enter from here? You can enter from here. This is another imbalance. This is the first, this is the first, this is the second, and this is the displacement to the downside. Did these two gap touch each other? No. Did it touch each other? No. This is an efficiency that needs to be filled. You can take an entry here. Normal. See, the weak is allowed to do the damage. The weak is allowed to do the damage. Look at the weak. The weak broke that imbalance and broke at that level. I said I always want to see the market left open. After the week does that, what happened? The body respected it. The body went down, rejected it. The second one went up, went to the what? The middle point of the imbalance. This is the middle point. It went to that middle point there, respected the what? The half. It respected the what? The half. At this point zone here, I can take an entry and follow through to this level to take my profits. Now, what if I was not around and I miss all this move? The market created another opportunity for. See, forget, the market will always create an opportunity for you. There's always opportunity in the market. This will not be opportunity come by but once. Opportunity they come for market well. So if you miss today, you may not miss tomorrow. If you miss tomorrow, you may not miss next tomorrow. Opportunity they come well for market. Now, look at this one. Let me show you something. Guys. Sorry for that. Let me show you something. Now look at this. Is this a fair value gap? Come on now, system. Let me see if you thank God. Is this a fair value gap? This one here. I want you to pause the video and check if it's a fair value gap. Let me delete all this one. This thing will start again now. Don't protest me to bits. Be looking for it though. Don't mind me here. Now check this candlestick, and this candlestick. Is it a fair value gap? Is there a fair value gap there? Look at it very well. Is there a fair value gap? I know some of you may not even pause the video, like, come on God, show us in. I don't get strength to pause video. I know some of you will not pause the video. Now, this is not a fair value gap. Why is it not a fair value gap? We can see this first candlestick feel this displacement from this level. It filled it down to this level. Then the third candlestick went up and filled it what? Went back and retest this candlestick wick. Is the candlestick wick aligned? If it is aligned, it is not a fair value gap. You can see They touch. Did they touch? Yes. This one weak, this one high, and this one low, and this one high. Did they touch? Yes, they touch each other. So this place is already what? Is already filled. This is already a filled fair value gap. So it is no longer a fair value gap. You don't need any longer. Don't see this and say you want to take an entry there. It is no longer a fair value gap because it has been filled. So what? Let me show you another one. I want you guys to check this one for me yourself. Now, I want you to look at this place here. Is there a fair value gap there? I want you to check. Is there a fair value gap there? Look at it closely. Pause the video and check. Yes, this is the first one. This is the third one, and this is the displacement level here. Does this first and this third candle touch each other even with their wick? No, they didn't. So what happened? We need an efficiency to be filled here. So you draw your what? Your line or your rectangular line. You draw your rectangular line. Yeah, there's it. You draw a rectangular line. That is what? That is the fair value gap. This is sell side fair value gap. Now let's now talk about buy side fair value gap. Let's talk about buy side fair value gap. For beginner, you have to backtest this first before you can start taking entry on it. You have to keep on doing a lot of backtesting before you can start thinking of, okay, I want to be taking entry. It's a fair value gap. Let me take an entry. You have to backtest it very well. Now, look at this. Look at the buy side fair value gap. You can either use this one and this one. What do we have? We have the first one and we have the third one. Is there a displacement to the upside? Yes, there's a displacement to the upside. Is this down candlestick and this up candlestick filled? No. Did they feel this displacement? No. Did their wick touch each other? No. Their wick did not touch each other. So what do? You draw a line or you draw a rectangular box. On this one high and on this one low. What do you see here? A fair value gap. What do you expect the market to do? The market should what? Retest the fair value gap and what? Go high. That is what you are expecting the market to do. This is a buy side fair value gap. Now I'm only going to give this one example of buy side fair value gap. So you just have to check it well. Check it very well. Check it very well. Check it very well. Now let me just give another example before I let you guys go. Sorry for my phone. Okay, let me show you this one. We have a candlestick here and we have another one here, and this is displacement here. Is this weak and this weak filled? No. Did it fill this gap? No. What do you see here? This is a fair value gap. What do? You draw your rectangular line. See, sometimes the market may not even hit your fair value gap before it start going up. Sometimes it may hit it. You draw your what? Your displacement level. The wick is always allowed to do the damage, so don't forget. You draw it. Is there a gap between here and here? Yes, there's a gap. What are you expecting the market to do? The market should what? Retest this fair value gap and go high. This is a buy side fair value gap. If you have any question, go to the group, place your question, and I'm going to give you guys an assignment. An assignment is you have to go and find a buy side fair value gap and a sell side fair value gap for me. Now paste it on the group that this is what you see. Then take your time to analyze those fair value gap on your chart. Always take your time to analyze it. Now, how do you hunt for the right fair value gap if it is going up or if it is going down? the first thing you have to do first is check what has the market done first. What has the market done first when the market open? Now let's go to when the market has opened. Now don't forget, this is the line, this dot line is when the market opened. I taught it on the previous video. Now how do you hunt for the right, maybe if it is a buy fair value gap you are looking for, or if it is a fair value gap, how do you know the fair value gap you are looking for? That's what I want to show you now. Now when the market opened, what do you see? The market consolidated here, creating a liquidity and clearing it out, creating and clearing it out, create on the upside, went down and clear that liquidity out. Now after the market cleared the liquidity out, is there any liquidity at the upside? No. Do you see any liquidity for the market to clear out again? No. The market will start hunting for all this one, and which it did, it hunted for it. Now the market start creating new liquidity to the downside. It create and it cleared, it create and it cleared, it create and it cleared. The more liquidity it cleared to the downside, the more it cleared. Now this is an liquidity here, it cleared it. It went up again, create a liquidity here, and come and clear it at this level. So when you are seeing all this liquidity, then start waiting for you to get a what? A buy. So the market can go and clear out the buy liquidity. What do you see? These are sell liquidity. These are sell liquidity. Now, at this place, this is an opportunity for you to take your entry. After you saw this move, what do you see? A rejection to the upside. What do you see? A rejection to the upside. The market went up and filled the half of this week. Yes, you're supposed to fill the half of that week. So you fill the half of the week and start retracing upward. When it started retracing upward, it cleared out this what? This liquidity. Is the first liquidity cleared out? Yes. Is the first liquidity cleared out? Yes. Now it cleared the buy side liquidity. Now, when it does this, what are you hunting for? You draw out your fair value gap because you are expecting the market to what? After this liquidity is being cleared out, the market will come and clear out this one. That is what you are expecting. That's what you are expecting the market to come and do. To come and clear out. I don't know why that line did not draw. Now you're expecting the market to come and clear this liquidity because it only cleared this one out and left this one alone. No supposed to leave am. There is still stop loss at those levels that is supposed to clear out. So you now sweat your imbalance here, waiting for the market to retest it. When you saw this movement and the market did what? Retested that imbalance. This is a buy side imbalance. You took an entry. Immediately clear the liquidity. Don't be open for all this other liquidity. If you want to open for it, then you are ready to set a break even. After the market went up, clear this liquidity that it created and clear this one out. You can set your break even at this level. What will happen? The market will hit you at break even, right? So you have make what? You have make something there. You have make a profit there. The market started consolidating. It consolidates. No, the market has been going on the sell side level before. Now it's now for you to hunt for a buy side level, right? You are not hunting for, because there's still other liquidity that it created on the sell side. Let me show you those liquidity. Let me show you those liquidity. Let me show you those liquidity. That is why I taught you liquidity first, because its liquidity used to be following your imbalance. Now the market has as it creates a liquidity, is clearing it on the downside. As it's creating it on the downside, it's clearing it on the downside. It creates this one, it cleared it here. It creates this one, it cleared it here. You see, it created this one, it cleared it here. It created this one, it cleared it here, right? So what is left? This liquidity, this liquidity, this liquidity, this liquidity. See liquidity at the upside that hasn't been cleared. Now what happened? Now the market went, it created all this liquidity and later cleared them with this one. Did it clear out this one? No. Did it clear it out? No. So you are still waiting for the market to come and clear this one and come and clear out all this one. So you are just waiting for a what? A perfect time where the market will make that movement to the upside to clear an upside liquidity first. Which it did here. Now at this place you can actually take an entry here. Let me show you. Pardon my system, please. Now, when you saw this kind of thing, this is a consolidation. Is the market moving in a good manner? No. What is it doing? It's going up, coming down, going up, coming down, going up, coming down, going up. So this kind of thing, you avoid it. Avoid this kind of scenario. Then it went up, balanced down, then consolidated here again, then create this movement. When you create this movement, then you cannot zoom in. Normally you have to be zooming. This is 1 minute time frame. This is 1 minute time frame. So the time frame also matters a lot. I explained time frame also in the previous video. So what happened? The market went down at this level. When you see this, you saw this movement to the upside, expecting this liquidity is being cleared out. Now you are expecting this one to be cleared out. You take an entry from here. It cleared it out. Chop your profit. Hold on again. The market consolidated. Make it that move again. Up, down, up, down. You hold your position. Waiting for what? Another entry. Always zoom your chart like this so you can see this. You can see this kind of jaguars, like this kind of movement, zigzag movement. There's no way you can enter from here, if not you lose. So what do? You saw this movement to the downside, right? It rallies up again, went down, right? Then it now rallies to the upside. Clear out this one. You created an imbalance here. Did it retest the imbalance? No, it did not come back to retest the imbalance. It's only when you saw this movement. Did this movement clear out any liquidity? No. So you cannot respect and take an entry after this one went down. No, you can't take an entry. It has to clear out this liquidity before you start hunting for an imbalance. Now this is your imbalance here. The market cleared this liquidity at this level. Did it come back to retest your balance? No. So that is not a trade for you to enter. So you missed that trade and the market did not fill you in. You don't have to cry. You leave it. And what do you see? The market start clearing all those liquidity it created. All those liquidity it created, it cleared them out and reached this level. Do you see it now? Then before the market start coming down again, consolidating. First start coming down to consolidate. When you feel that okay, the market has cleared enough liquidity at the upside, the market is now having this kind of down movement, then you should have that okay, the market is about to what? To go down again. The market is about to go down again because all this liquidity it cleared it out at the other side and it created another one. It cleared at the upside and came down to clear this one. It cleared this liquidity here and it came down to clear this one. It started consolidating. Did it come back to retake this liquidity? No. It created an opportunity for you to enter for me and follow the sell run. So this thing you have to practice it. You have to practice that fair value gap and liquidity together. Where is the nearest liquidity taken? Does the market make a displacement to the upside to clear liquidity for me to hunt for an imbalance? If it did, then you draw out your fair value gap, waiting for it to hit your fair value gap. Does the market create a sell side liquidity hunting for a sell side imbalance? Am I aiming for the next liquidity on the downside, on the sell side? If it is yes, wait for it to retest your imbalance. So if you have any question, please feel free to come to the group and I'll answer your question of fair value gap and liquidity. Those are the two things you need. You don't need much. Just keep on practicing that fair value gap and liquidity. You see a fair value gap, is it going for a liquidity after it takes in the fair value gap? Which liquidity is it going for? Is it the buy side liquidity or the sell side liquidity? Those are the things you have to hold together to make profit in the market. So if you have any question, hit me up in the group and I'll give you an answer. Hope you find something meaningful on this free forex class. Hope you find something meaningful. This is all I'm teaching you guys. This is all. You can see I gave you a gold for free. Nobody can give you this gold for free. I gave you a gold for free. It's not late for you to practice that gold. Do back testing. Start doing back testing. Start back testing everything. What I mean by back testing, Start going to the previous day. Is it on the 5 minute time frame? Is it on the 15 minute time frame? Start going on the previous day and start looking for those fair value gap. Looking for, okay, after the market hit this fair value gap, where did it now went to? After the market hit this fair value gap, where did it went to? Start doing that practice. You have to do it for about 2 to 3 months before you can start doing live trade. Before you can start doing live testing, you still have to do live testing for about 2 months before you can now start putting live fund on it. So you have to keep on testing. This is a free pure gold I've given to you guys for free without asking for penny. For free. Now, but the thing is, even with this, you need a mentor, because if you say you want to practice this alone, like you want to be doing it alone, I bet you will fail on the wrong run. You will give up on the wrong run because you feel like this thing is not working. Even when you have done the back testing, even though you have done everything, but when life fund is now involved, you are losing on life fund. See, it takes time. It takes time for you to have that mindset to place a live trade on a live fund. When you are seeing losses, when you are able to control your emotion in the market, it takes time. With mentor, everything will be easy for you. You can just make an analysis, send it to your mentor will cross check for you, tell you if it is okay or not. If your mentor tell you that yes, it's fine, you will have that free mind to place a sell trade or to place a buy trade without thinking. That is the power of a mentor. Something that will take a student 2 years, with mentor it can take them 3 months. With mentor you can get rich on forex in 3 months, but without mentor it will take you years. Ask anybody about that reality, about a mentor mentoring a student, and the difference between a student without a mentor and a student with a mentor. Google it out, watch YouTube on it, then you see what I'm talking about. With mentor you can achieve success. On your own you can achieve success, but the time it will take with a mentor will differentiate the time it will take with you. It will take more longer time with you than with a mentor. So if you have any question, enter the group and feel free to ask. If you want me to mentor you, if you want me to guide you through, if you want me to be your personal mentor, I'll charge you for that. Yeah, I'll charge you for that. But I won't charge you to the extent whereby you won't be able to afford. I'll charge you the money you will trade, and the money you will withdraw, and the money you will pay me. How much am I charging you? If I tell you the amount, you like this boss say they play the Oshka Boni be this. It's just 20,000 now. Yeah, just 20. See, just 20,000. What did I even want to use? What did I want to even use 20,000 naira for? Like, what did I want to use it for? 20,000 naira will not serve me anything. Yeah, that's the true fact. Will it fill my gas? I'm using 12 kg cylinder, and gas now is 150. With 20,000 fill 12 kg cylinder? No, with your 20,000 fill 12 kg cylinder. Now, if you want to calculate 5 kg, that is 5,000. 10 kg, that is 10,000. 12 kg, that is 12,000. I'm using 1,000 to calculate, so I don't add the 500. So after filling the gas, will they cook food for me? Will they buy like 20,000 naira is like a chicken chain where people use it to sub. 20,000 naira is something you yourself used to spend a day. 20,000 naira no dey even dey reach you a day. So asking for it is nothing. I just want to gather serious. I need serious students. If you are really serious, I will expose so many things for you in the forex market. I will expose so many things for you in the forex journey. You will know so many things to the extent that you'll be a guru in the market. But don't forget, a guru also loses in the market. So don't believe that if I teach you finish, if you become guru, you will never lose. You will lose, but you have more view rate than your loss. That's just the true fact. So what am I charging you? 20,000 now. How much is 20,000 now? So if you I love the idea for me to be your mentor, I'll be ready to be your mentor. I'll be ready to guide you on the forest journey. I'll be ready to help you. But the charges is just 20,000 now. That is chicken now. Nothing much. I'll teach you what you have to know. You can go home, practice it, keep on practicing it. You can practice it on your own. You can make it on your own, even without a mentor. You can make it on your own. Practice